learned from the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down, we gon' get it.
All right, ladies and gentlemen, I got your Watchlist coming in July 9th, 2020, and I have 3 stocks that are going to go crazy because the market really isn't doing too much. Kind of what we expected coming into earnings. There was a lot of news, no news. Again, nothing really new, but a lot of headlines. Nothing big enough to move the market. We're kind of getting ready for earnings. There isn't anything planned for this week like we've talked about. So that's kind of playing out, but we are getting that cat dog, that push and pull. So even though the indexes aren't really doing stuff and a lot of stocks may not be doing stuff, there is individual stocks doing crazy things. And if you've noticed, there's been a lot of news from buyouts to companies rolling out stuff, closing stores, all sorts of stuff. So there is individual plays. I have 3 different stocks. We made a lot of plays again today. We're writing plays, and I really want to talk about the strategy coming in because I want to take profits on some of them, but then I'm like, we are very, very early in the earnings season. So we have a lot to talk about today. I have the keys for you. I'm going to go over what happened with the markets, kind of what we're expecting this week. Again, it's pretty much nothing, but we still could get a shocker. And then we'll go over the plays that I made today and the ones that I'm looking at tomorrow. A lot of them are some of the plays and trades that we've already made today. So we have a lot to cover. Let us not delay. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description and it is pinned in the comments. We better see you there in the morning. It's free $99. It costs you nothing to join. YouTube.com/thestockmarket. You can post the plays, see the plays, and watch the watch list come to life and partake in the world's first ever stock market musical called Chattington. So hopefully we see you there. But while you are here, do not forget the most important thing you need to do. Post or watch this below. Let us know what you're looking at. You got any plays, comments, remixes, anything, post them below and source that info. But right off the bat, before I even kind of switch to the keys, you could see it in the market. This is how we played out today, even top to bottom. We closed up 177, but we didn't really move more than 250 points. So the last few days were actually surprisingly bigger, but you could kind of see how we've leveled off after this mini rally, after a little bit of earlier panic, after the other bigger rally. But notice we are still in the original Wuhan zone, especially if I want to go take it back. Well, second Wuhan zone. Bro, I'm sick. Oh my gosh. But we didn't move much. Again, with all the headlines, everything that came out, price action was really reflecting the environment and what we got today. There was a lot of stuff here and there, but there was nothing too crazy. So moving forward, we are waiting for earnings, news, but you're getting those cat dogs like we've seen. Again, the plays like Walmart, Tesla doing its own thing, Apple hitting 52-week highs. Now we have NVDA breaking out, Amazon going crazy. There's all these big moves, but you just saw the S&P. There's really not too much movement, it looks like. So if we're really going to see everything move, it's going to happen around earnings, leading into earnings, or if we get news of scale. But as far as everything for today, there was some talks and this kind of affected the market. I don't really think so. We'll see how serious this is and when it comes up, but talks about the dollar Hong Kong peg and kind of how we're going to treat China, a little bit of those tensions, but we've seen it. It hasn't escalated again, and we lost on all those trades. I think I still have a little bit of time, but most of those we got really, really clapped. So that is like a memory you could feel, especially if it's in your portfolio. So we'll see what happens, but why I bring that up is so you can understand how no real news has changed. At times we've seen this situation develop, but it hasn't really hit a boiling point or necessarily got worse, especially in the midst of what's happening with the virus and all that. So there was that. There was some price target raises on Apple and some upgrades, and you're going to start seeing that coming into earnings and before and after earnings. There was mortgage applications. Apparently the demand, it was really, really high. Again, we've seen a lot of positive real estate news and economic news. A lot of this data, markets usually never would look at this, but given the context of what's happening with the virus, they're paying attention. And that has to do with the economy and all that. And then that was what we also saw today. We saw the press conference opening up schools, and it's kind of important and it has an effect on the economy. But as far as like the stock market, it's not anything new for pricing. I think it's already included in this more or less optimistic outlook. So that's what we had today. Again, there was a lot of stuff that was headlines, but nothing new. The market didn't do too much. Right now, we have to be waiting for news or even a shocker. If anything happens out of nowhere, if there is a surprise or a new development, you never know, and that is the risk in this marketplace. But for the most part, like I said, there's an optimistic outlook. Unless something is going to get the market's attention, like a cat in a laser, where it's like, oh my gosh, that's really bad. The market is firmly going to start focusing on earnings and how these reports come out and how the economic data comes out. That is what's going to start driving stuff. Again, think about the bird and the flapping and then the gliding. Does that give you the visual? I really hope this analogy makes sense. Otherwise, this is a lot of theatrics. But in all seriousness, no, that is how we are going to set up into the plays. This focus on earnings and how the market is going to react to that. We'll watch for news. We'll see what happens and get time and keep this in mind. You have an event, spreads and events. We did crazy spreads. We did crazy plays. So I guess now is the time. But let us get into the plays. Right off the bat, the first thing, here are the 3 plays. Again, these are the stocks going crazy. They have individual news. I have reasoning behind them. I own these plays. We'll go over them. The one that I do not have is Boeing, and I want to do something with NVIDIA. We already have that. Now, like I'm saying, a lot of these plays, we made them. I have good profit on a lot of them, but we are pretty early in this earnings cycle, so I have to keep that in mind. But I like these stocks for specific reasons. So not only is there these plays, there's also the rest of the plays that we're writing out, like those Amazons, the Disneys that we got yesterday. Again, that's on the list. So I need to see how I'm going to play this one out. But there's also Facebook. You guys remember Microsoft, all that. I even took some profits on some plays like BDX today, completely sold out of those positions. But watch out for that. But the first play, I did make a play on Walmart. I think I grabbed like $3,000 worth, I believe. It was a pretty big play. The coin approved it. I did 2 different plays. I did a premium sell. You guys are going to think I'm crazy here, but I grabbed 50 of the 180 calls for January. So this covers multiple earnings, has 191 days. That seems like a lot, but it doesn't seem like a lot for some reason. I don't know why, but it was 3 standard deviations out the money, but now it's came close to the money. But I grabbed 100 of these at 70 cents. They are holding up, but again, now this is what I'm saying with all these plays. I also have that $1,000 position. So now I have it on the E-Trade, but we also have the August 145s that we got yesterday. So I still have 10 of those as well. So all the premiums held up. That's why I got these. I pretty much paid. If we even go to the option chart, you're going to see, again, this play, I paid premium on it. I'm pretty much going pretty big on this because Walmart had premium all day today. Regardless, I think the news was big, and given the nature, we got to learn a little bit more about it. This news is going to take some time to get rolled out. So they have stuff working for them, like I said, with the whole COVID, all that, just how they've performed. But then I think the e-commerce news is pretty much going to make Walmart react like Disney. So I did pay a premium. I could have got these cheaper, but I also did another set. I forgot about that because what happened, we did this yesterday when I grabbed those Walmarts when the stock was breaking out. If you guys remember, you could have snaked the 130s for the same price, but that's what happened here today. So after I got these, I grabbed these within like 15 minutes of the morning or the first set, but I got the 180s, but then what happened was that these 170s, they pretty much were the same price on the bid, and they're pretty close now. So I didn't get too good of a deal, but I ended up buying 5 of those. So I'm in on the Walmart. Again, the reason why I am kind of comparing this to the Disney trade, but I ended up paying a premium. So keep that in mind. This one, I guess you could say it's emotional, because at the end of the day, you could see it was kind of cheap. You know, I did get these at 60 cents. So I wasn't really necessarily like too high on the premium scale. You could kind of see, so it wasn't like the worst deal, but compared to yesterday, you know, these were going for 20 cents. But in my mind, I was like, well, okay, I'm holding those August contracts and those are holding up 1,000%. If these were 20 cents yesterday, and I get them at 60 cents, I'm only paying a 300% premium. So that's the logic behind it. The coin said it. I wanted to go big. I like it, and it has multiple reasonings behind it now. So that's the main thing here. I think the news is bigger than it's expected, like I said, or than the market's pricing in. But if I'm wrong, I'm hoping to be saved by the earnings. However, Costco had a bad earnings, so that was following their Q2. So this is definitely going to be a risk in that sense. So overall trade, I put $500 into the second one. I got 50 of these at 60 cents. I am going to buy more. I was going to put $10,000 into this play. So I'm starting with this like 3,500 and then the other ones. And then pretty much I'm going to use the rest of the money if I go down on it and need to average down, because like I'm saying, this play is going to be a risk. So that's the first part of that play. And then the second part of the play, I sold the premium, and then this is where it gets crazy. I only collected $530, but this is for July 24th leading into the earnings and with everything. So my logic is I could always roll over, but the problem is I violated the rule, and that's why you guys should, again, nothing on this is a recommendation. I'm trying to risk gain, lose almost financial choice today. But in all seriousness, I should, you're supposed to go small with this, because I did 10. So it'll be hard to average down out of this, but I shorted the 118 puts. So you could see here, it's out of the money. It's $6. So it's like about 5% away. But I'm hoping the earnings premium and the stock hype will keep this up there. So I shorted 10 of these at 53 cents. So I pretty much need the stock to close above 118 by July 24th. So you need a lot of buying power to do this trade. I think you need $18,000, and then your max loss will be 117. It says, but it's only like 18,000, but that's like on margin. I'm pretty much agreeing to buy 1,000 shares of Walmart. That's like $118,000. That's why it's saying that's your risk. So that's another premium sell. Again, I wanted to get some of that and just kind of take advantage of the market moving a lot, but not doing a lot, and them being some premiums because of everything. Because even with Walmart shooting up, it made the put prices go up as well too. So I wanted to take advantage, or at least the IV wanted to take advantage of that. So that's the first play. The next play is Disney. I'm in this play. I don't know if I'm going to add more to it, but I might even sell some of the ones I'm in, but they're at a breakout level. I'll show you guys on the chart, but I pretty much think the market is underpricing the impact of both Disney Plus, the additions, the impact over the virus, and then now they had the positive news today that they're reopening, even though they said they're closing, and then they're going to reopen. So Disney, ESPN, sports, all that. I think it's going to be pretty interesting. So I ended up fat fingering that trade. Again, that was another big one, so I like it, but I'm also looking at this one. If I'm wrong, I got time, but again, the position is big. I didn't really mean to do it. So we talked about it today. I even said it yesterday. I'm cool with the position. So even forget the fact that I didn't mean to. I'm in it. I didn't sell out immediately. I'm stuck in it. So the thing I'm trying to remember here is that this is kind of early in the earnings cycle, but wanted to sell for initial investment today, but I was pretty greedy. I'm still holding it. You guys can see the trade here. So it was a $3,000 initial price. We're up 41%. But we got a lot of time. It's all the way till October. It's at the 170. So there was even a lot of activity. I was considering selling like I think 50 or 75 contracts, getting my $3,000 back and getting 25 for free and holding them. But again, the whole point, this earning strategy, you could get some crazy moves if it does that. But the market's been crazy. I don't know. I got greedy. So we'll see. It's still early in the earnings season. And then finally, the play I do not have that I want is going to be Boeing. I think it's going to pop off before after earnings. So I do not have a play, but I think it's going to be one where it goes crazy prior to earnings because of news or the earnings run up, and then the earnings kind of doesn't do anything, or it doesn't do anything. Earnings run up wise kind of stays the same. Earnings is going to be crazy, doesn't make it move, and then after earnings, some piece of news makes it go crazy. So keep those two scenarios in mind. So I'm going to look for a play on there. I'm going to do a strangle, calls or puts. It's literally just at that level. So I'll even come back and show you, and you guys will see in the video. I even need to show you Disney, but it's just holding up there. So it's at a very interesting spot. We know it could move. We got this pop. We didn't take profits. We made a lot of money on this move. You guys know Boeing's a stock like this. It's all about timing. So we didn't play it again this week. That's why I've been waiting. I'm playing with opportunity costs. So I'm thinking a strangle. I'm going to get time on it, but be on the lookout, because when this thing gets ready to move, it's going to get moving. And it's just, it's a weird game of musical chairs right now. But as far as Disney now, this is what I wanted to show you guys, because this is when everything popped off. This 116, 117 level is important. One, you see them on the year. They got really impacted because of Disney World and Disneyland and all that stuff. But if you guys remember, this was their first earnings, and then this was the Disney Plus move, I believe. Or no. This was the Disney Plus move, and then this is when they got like some of the earnings and surprises off of it. So this is an important level. You could even see it at one point. This was a very important, like 4 or 5 year high. So leading into earnings, or if the market and upgrades and people kind of come around, if everything's doing good, if Zoom's doing good, if Netflix is doing good and Netflix reports first, Disney's going to be the sympathy. So that's why I'm like, I kind of want to ride that play out. But that's why I think this stock is going to go crazy and it's at this level. Again, same thing with Walmart. I think Walmart's going to act as a different piece of news. And again, I'm extremely biased. I have big positions in all of these plays now, even NVIDIA. Remember, we bought this play now, but NVIDIA is breaking that 400 level. They got a little bit more time on their earnings, but they're looking pretty good. So 4%, remember, like I said, 2% is cool, 6% is crazy. They did 420. Yeah, I guess it was high. But they made a good move. Remember, we're still in that position. And I grabbed a lot of those too. I remember I grabbed those yesterday. We covered it on the watch list. You guys did not like the video. It was awkward. They're up 50%, so short terms definitely went up a lot more, but I'm looking at this one. I'm still holding that entire play, considering selling back for initial investment like the Disney. But again, it's very, very early, and I don't know why I'm feeling greedy with it. But what I might do with NVIDIA, and this is going to be extremely greedy, and again, I'm feeling this. You guys know me. I have to see the market, because if the prices are really expensive, I get cheap real quick. So don't get too jumpy. But if the market gives me what I'm looking for, if things are chill, or if there is kind of a clear earning setup, I want to take it. But if NVIDIA goes crazy, breaking above these 400 levels, setting up into earnings, I think I'm going to do my rollover strategy, but I don't want to sell out my other position there till August. So I'm going to kind of treat it like I have a short term, try to find one of these cheaper, shorter term ones with like a week or two of time, and play it in the morning if it's really, really going to break out tomorrow. So really, really watch NVIDIA. I like that. That's the third one, I think. I think it's tied with Boeing, but NVIDIA probably has a better chance at that level. So those are pretty much it as far as those plays. Everything else we covered. I also grabbed a Square play. I just wanted to get in on it. It's going crazy. Then it even shot up here a little bit after hours, but shout out to Eagle Eye. I know he likes it. It keeps going crazy. I'm usually not a fan of them, but I was like, you know what? Lately, again, and this is what I'm telling you guys. This I know you don't believe me, but this is what I mean. Like, the stock market is actually going crazy. Like, this is actually crazy. That's what I'm saying. It's like some of these stocks are breaking out from these levels, and with earnings, and then with the anticipation, and now with the rates back to zero, it's changing some stuff. So I hope you guys are seeing. So I wanted to get in on it. I went in with just $150, but they ended up going up. I think they doubled. I don't know. They have a large spread, so I'm in those. I got 5 of the July 175s at 35 cents. I'm holding those. Sold those BDXs, and then lastly, we got a Zoom play. I grabbed just one $50 at 24,750 put, and I laughed because someone just said you're throwing money away at the puts because Zoom just doesn't go down, and it dropped, and that's why I said they had news that Microsoft or Google released like their video streaming platform competitor, but Zoom dropped. That's why I was like, well, maybe. I got short time. I think it was a weekly. Yeah, that one's for this week, but I got $150. Bad trade, but I said we'll see. It's like $20, $10 out the money if anything went crazy. But watch them. Still in that Intel. Surprisingly, my puts went up in value or held. So remember I said I wanted to get some, but they held. And then Amazon, we're still in that play. Damn, it went even crazier. So leading into earnings now, we're only $200 from the money. So we set up, and this is what I mean by both playing the earnings run up. You get to not only sell the hype, but this is why it's like kind of riding the wave. That's how I'm trying to ride it with Disney and NVIDIA. You don't want to get too greedy. We've seen it happen. I think like 3 earnings seasons with NVIDIA, we got a really, really good run up, but then right before earnings, if you don't sell it, it could get crushed, but then they could also go up a lot. But now this is what I'm talking about with the Amazons, because if we come back to this trade, I'm still holding this one for earnings. Remember, I had 3 of these. I made them free. Remember, you could have repeated this trade on Monday morning, and then it went crazy. But this is for next week. It's going to capture the earnings run up. So this doesn't play earnings, but now you can see with the expected pricing here in the orange, but this thing was a few standard deviations outside the money. Now it's just like right outside of there. So some of the best part about these earnings plays is that if you ride them, you could get them. You know, we're $200 out the money, but Amazon did that in a day. The other day when we bought this, we were like $600, $700 out the money. It's wild. So that's why this contract's good. I could spread this for earnings if I'd like. Give myself, another $10,000 difference like last time, but we'll see. It's a good profit already. But I'm still holding those. As far as, again, everything else, those are all the main plays and ones that are going to go crazy. There's also news on Twitter. We talked about it today. There was rumors of them starting a subscription service. In the middle of the day, we're like, who would even pay for it? But Eagle Eye and Hits posted a very interesting link. It was like first rebutted that the service was fake. or that it was just a rumor, and then they didn't confirm nor deny, but then there's a job posting listing on Twitter that says on the job posting they're starting one. So it's kind of interesting. We don't know where the rumor's originating from, but I was looking at it. I was like, I kind of want to play it. It reminded me of a time. Couldn't think of it, but I don't really like Twitter, but I'll watch it. We'll see. Again, watching those intels. Facebook still holding all those calls. Again, that play is a little bit messy there. We're in that Microsoft random play. They're hitting all-time highs. I'd watch them. And then finally, like we said, Boeing, and then GLD. What I want to do, you guys saw I sold that big play on Walmart with the premium sell, but what I want to do, I was thinking about it, I was like, I should probably just sell it on GLD. Gold is holding up. It's doing good even with the market going up, and I think even as the market does go up, people are going to get kind of worried given the marketplace, so it kind of makes sense, and then watch the dollar and everything else. So I think I might start selling puts on GLD because I guess I wouldn't mind buying paper gold, but if I could collect premium, again, the premium's usually crap, so I'm hoping it's expensive and that it would be worth my while, so we will see. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to think about the burdens you're taking on, baby. Especially coming into earnings and balancing the budget. Balance the budget. Balance the burden. Ooh! Spreads and events. This is an opportunity. Stay focused. Don't be afraid to take profit. Don't be afraid to play small. Don't be afraid to paper trade. Don't be afraid to miss out on something. Don't worry. What's yours is yours, and it can't be taken from you. Don't let me get too hyped, but the code loves you. I love you. I'm going to see you in the morning. Let's go.